Back to the ETF Inspector. It's Saturday, June 14th, and this will be the video covering my trades for the previous week, June 9th through 13th. Hope everybody's having a happy Father's Day weekend. Hope you got some steaks ready for the grill tomorrow and some nice new ties and socks and underwear coming. But channel's doing well. We had a great week, especially yesterday, thanks to Retire on Dividends. Gave us a shout out, and that's why most of you are probably here in the first place, but we jumped by over 100 subscribers, so we're getting closer and closer to that 1,000 subscriber goal. All right, so won't be talking about specifically how the Yield Max funds trade today on this video. This will just be if anybody's interested in transactions that I made throughout the week. So not really in any kind of date type order. I tried to space them out. My wheels, then my poor man's covered calls, spreads, and then finally just my dividend funds. All right, so we will start off with BTON. Just started trading them a couple weeks ago, but so last week ended with me closing them out but not selling anything new. I just kind of waited for an opportunity. Didn't quite get one, but wanted to bring in something. So I finally sold another $21 put on Friday, collecting 32 cents per share times 100 shares. It's $32, take away the commission and fees. So I still don't have any shares at this point, but I sold these 1% out of the money. So I don't mind getting assigned. And so far I've collected $78.90 total. That's a net after, paying commissions and paying to close out previous trades. So they're roughly $21, $22 stock or fund, and I've collected about $80 so far on that one. But this week, $32. I thought about this right as I was getting ready to click record, so maybe in the next video I'll try to start having a total profit or loss for the week, totaling up all my trades. All right, next is Webull. Again, only started them a couple weeks ago as far as this wheel is concerned. So anything in gray we've already talked about in previous videos, so I don't want to bore you with that. So last week I sold the June 13th expiration date with 1150 for this past Friday, and on Friday I rolled it. Kind of got away from me, and I didn't want to get assigned this far out of the money. I don't mind getting assigned. If you shouldn't be doing a wheel if you don't want to be assigned, but I don't like to get assigned way out of the money and immediately not be able to sell calls. So I went ahead and rolled it. So paid $1 per share to close it out and collected $1.10 per share, moving it out to July 11th. So not happy with that one. I was able to drop it from an 1150 to a 1050. A little bit more comfortable getting assigned there, but I've got some time on that one now. So July 11th is when that one expires. So I made a $10 profit there, but now I've got to wait all the way till July. These real volatile ones, I don't normally like trading that far out. I went ahead a little while later and sold another cash secured put expiring this coming Friday, also at 1050, and collected another 42 cents on that one. But that one's 1 week compared to nearly a month. So let's see, all in all, I haven't updated these charts to make sure things are right, so we can ignore that. And why does that look that way? So far I've collected $108.57 so far just selling puts on Bull. Eventually I'll get assigned and start selling calls, but all right. Next, IonQ. This one's my favorite. I've been lots of trades with them. So let's see. Last Friday, I had sold a put expiring this Friday at 35. The price was at 39.17, so they were 12% out of the money almost. Collected 45 cents per share, $45. So on this Friday, I closed those out for 1 cent. So that was obviously a nice win. So let's see. So I had to put up $3,500 collateral for that trade. Collected, well, 45, take away the commission, and then take away the dollar in commission again on the closeout. So I made $43 over a 7-day period, which is $6.18 per day, or 1.24%. And if you annualize that, if I were to make that trade over and over again all year, that'd be a 64.5% annual yield. So not bad. On these, I like owning them. I like buying and selling. I don't care calls or puts. But the problem is I recently had a covered call assigned on me when they had a big pop. So I had to sell at $31.50, and I had purchased them at a higher price under assignment earlier. So the way things are going to look for that, that'll look like a loss, even though I made up all the difference and then some selling options in between. But so once I sold them at below what I bought them for, if I were to turn around and buy them back at a higher price, it's going to trigger a wash sale. I've got to look up whether it's 30 days, 60 days, 90 days, whatever the case is. But I just know I'm not there yet. So right now I am avoiding assignment. So I'm selling these pretty far out of the money, 11, 12% out of the money. And even if they go in the money, I will roll them. I will not let them get assigned because I don't want the wash sale to get triggered. Okay, so I went ahead and closed that out, like I said, for a penny. And then I started a new one again for next Friday. Dropped it another 50 cents to $34.50. Like I said, 11% out of the money. Collected another 45, and we'll hopefully get to close out real nice and cheap. If I can, generally I like to keep 90% of what I collected, but I knew this one was nowhere close. I mean, on expiration date, it was in the 39 range with a 35 strike, so I was going to go ahead and pay a penny. And also, I don't know if everybody's broker's like this. If I were to select to roll the order, it would buy to close and then sell to open, but it would charge me the 68 cents as opposed to if I just buy to close it, it only charges me 3. So sometimes, you know, you can take advantage of that. Sometimes you can't. Some people are saying, who cares about 65 cents? But, you know, I just like the percentage. And if I can keep my 65 instead of give it away, you know, a couple hundred trades a year, then I will. So that's the story on IonQ. Definitely my favorite one to trade options on right now. Oh, let's go up. So far this year, trading IonQ, I've made a profit of $941, and that is with the stock. When I started trading it, the stock was around $42.90. I got assigned at 39. Where is it? Where's the first assignment? 39. Stock dropped all the way down to 18, came all the way back up. So I took a beating, worst case scenario, got in high, rode it all the way low and back, and still made $940. That's the beauty of options. That's the beauty of the wheel. You can just keep on making money. If I had bought the stock at 39, rode it down, rode it up, I'd be breaking even right now. No profit. So that's the beauty. Okay, next, Mara. I started a new one on this. I just had money burning a hole. I had an extra $1,500, and I didn't want it to sit there and do nothing. I wanted it to collect some money. So great idea, not necessarily. But I was looking for stocks that took a hit. I want to say on Friday, Mara, let's take a quick look. I think they were down like 6%. So I'll scroll through. You know, if you follow my channel, I follow the Yield Max, Ulti, and LFGY. So I like the funds that they trade anyway. That kind of puts them on my radar as far as high volatility. But if the professionals are willing to trade them, I will too. So I think I even sold it. You know, it ended the day about 5% down, but it was worse in the middle. So I went ahead and picked a stock that was nearly 5% down or 6% down, and I sold a put on them and let's see, I collected $20, 20 cents per share, selling a $14 strike that was 6.2% out of the money. So we'll see how that goes. And it expires this coming Friday, 1 week. I feel like oh, never mind. All right, I got one more wheel. TSLL, I started on these other than way back in January, but then I started on these when President Trump and Elon Musk had their little fight, and Tesla tanked that Thursday. I thought it was an overreaction, so I said I am selling puts on the double leveraged Tesla fund because it was down, I can't even remember what percentage, double digits, maybe even like 20%. Made out well with those. So this past week, the only thing I really did, I had things expiring on Friday, and next Friday, 10, 10.50, and 9. And I was able to close all of them out as wins, paying. So I collected 44, 36, and 64 cents back when I sold them, and closed them out for 3 cents, 4 cents, and 3 cents this week. 2 of them on Wednesday, and then the last one on Friday. To me, it didn't make sense to let a double leveraged fund put on a fairly volatile, especially volatile situation. I wasn't going to let it run for another week just so I could keep 4 more cents. So I went ahead and closed that out, call them all wins. And that's why I have money burning a hole. Since TSLL was up a couple dollars, I don't want to chase it up selling puts only to get caught. So right now I don't have any TSLL, but so far I have profited $167.45 selling puts on them. All right, that's all for the wheel strategies. This will be a real quick update. I have 2 poor man's covered calls. If you're not familiar with that, you buy a leap, which is a long-term, deep in the money call, and then you're actually able, it's almost like having a synthetic position. You're able to sell calls off of that. You're able to sell covered calls against that. So whereas, let's say, this is Intel. When I bought this, Intel was at $22.67. So if I wanted to be able to sell calls on this, I would need to buy 100 shares of that, which would mean I needed $2,200. Not that I didn't have it, but since this was a new system I wanted to try, I wanted to learn it first. So I didn't want to get burned, so I picked something that wouldn't crush me. I watch options on dividend, or options with Davis. Let me see if I'm saying that right. Options with Davis. He's got great videos. He's got a couple of rules, right, for picking out things to do poor man's covered calls on. So I went ahead and tried it. So I bought it for $8.95, a $15 strike. So it was 33, almost 34% in the money. So obviously deep in the money, nearly a 0.9 delta. And then I've just been selling calls against it ever since, just collecting the money. So as of right now, I don't know why I didn't gray this out. We've already talked about it. So I just have a call sold against it right now that expires next Friday. So I will be rolling that this coming week. Sold it for 26 cents. I could have closed it for like 4 or 5 cents this week, but this one's obviously less volatile than a double leveraged Tesla fund. So I'll go ahead and swap this out next week. I like, again, to keep like 90%. So I'll put in a buy to close for 2 cents out of a 26, and then I'll go ahead and sell the next one roughly a month out, and we'll just keep going. So far, started out with a cost of $895. That was buying the leap, and then collecting the money that I have so far, I've brought my cost down to $795.06. So roughly $100 I've chipped away at that. And this is good until January of 2026. So the call itself has intrinsic value of $5.14. So even worst case scenario, if it got all the way to expiration at this, I'd be able to sell it for $5.14. I think Intel's going to go up. That's why I bought into this. But either way, I think I'm going to be able to sell enough calls between now and then to chip away at that. If this doesn't end up being a winner, then it was just a nice lesson learned. I'm learning new strategies. So, all right, I said that this would be a quick update, and then it took forever. So, at least for SoFi, everything I just told you about is exactly the same. I don't know why I grayed that out, though. That's going to stay open the whole time. The nice thing with SoFi is that's out till January 2027. The other nice thing is I paid even less for it, $6.83. SoFi's been going up. It's over 14 right now, so I actually have calls sold at 14. But that's beautiful, right? Because it expires next week. Big deal if it's 9 cents in the money and I got to pay 9 cents. I'm going to be able to sell the following months for a real nice premium. I had a third one on APLD, but it actually exploded. It doubled or tripled in price, and I had to just let it go. But it still ended up being a win, so no big deal. All right, so I will be definitely swapping out the SoFi call next week. All right, and then I started the year trying to play around with spreads. Didn't do so well, stopped for a little while, and then just recently getting back into it again. So one day IonQ had an absolutely explosive day. I thought it was way too much, overbought. I don't know if you watch your indicators or your technicals on your charts, but I already have talked about this one, so I won't go deep into it. But sold a call, bought another call further out, and just kept the money. Sold it for 57 cents, closed it for 1 cent. So I went ahead and did that again. GameStop had a horrible day back on, I think it was June 11th or June 12th. I don't know if I did it on the day of or the very next day. So they dropped, 22% or something in a day. I thought it was an overreaction again, so I did the same thing. I did a put spread. So I sold a put at 21, and then I bought another put at 17. So that just protected me just in case it just keeps on falling and I'm wrong, right? So the worst I could do is lose $4 per share or $400. So I did that while the price was at 22.10. And on the very next day, so that was the 12th, on the 13th, the stock went back up a dollar, and I was able to close it out for 18 cents. Now, generally, I want to keep a higher percentage than that. Sold for 72, bought it back for 18. But if I can I think that turned out to be keeping 75% of the money. If I can keep 75% of the money after one day, the trade went in my favor so well in one day, close it out, call it a win. So that's what I did. So as you can see, I had to put up $400 in collateral to open the spread. I made $52.33 in one day. So that's obviously $52.33 profit per day. That comes out to be a 13% return on capital, 52 out of 40. And if you annualize that, if I could make 13% per day for an entire year, that's 4,775%. So that's I'll take it every day. So again, same thing. I was just looking for things that made real big moves. So Circle Internet Group had what'd they do? 25% up day on Friday. So I said, let's do it again. This was a $5 spread. I sold a call at 140, and then I bought another call at 145, limiting myself to a possible loss of $5 per share, but I collected $1.05. Now, unfortunately, I did this when the stock was at 129. It went up to 133, and that price more than doubled. So if I would have been a little more patient, I could have collected over 200 instead of 100. But that's okay. Like my brother told me, we're trying to make money. We're not trying to make all the money. So collected $1.05. If this settles out, and it's only a 1 week one, so it doesn't have a ton of time to go against me. If this kind of gives a little bit back or settles down, I'll be able to close this nice and cheap for another win. And if not, hey, that's trading. So currently, you can't see any kind of annual because we don't have a close date. But let's say we let it go all the way to expiration. Whoops, put that in the wrong column. 6/20/25. It'd be a 7-day trade, making over 100. It's $14.81 a day. That'd still be 1,000+% annual return. So I'll take it. So this might become a new strategy of mine. Before I was just trying to pick stocks and look at the price. Now I want to do it on days where a stock absolutely explodes or tanks, because a lot of times it's a little bit of an overdone, and it comes back to a happy medium after that. So I'm not trying to make a fortune. I'm just trying to catch those little bounces. All right, and finally, we'll just look at my dividends in that same trading account. So if you've listened, right, I cover Alti and LFGY and a bunch of other individual ones. So I have some of them here. I also have other ones that are in my retirement account. So I only really show and talk about my trading account because that's the only money I actually have access to. Retirement, I'm 40 and it's going to be forever before I get to touch that money. But all right, I've just got them in order based on current allocation, right? 22% being the highest for YMAX on the way down. The only reason I left these on there, even though I've sold out of them, is because they still go into the total distributions. So for the year so far, I've been paid out $1,700 in dividends. So far this month, I have collected $386.65. I still have not received Netflix. That's the Netflix Individual Income Fund from YieldMax. I haven't gotten a distribution from them yet, so that's still coming. I may end up getting a second on one of these. I can't remember. But then obviously YMAX and Alti still have, a couple more weeks, so they'll continue going. So probably be around $500-600 by the end of the month. So I've lost $335 in value based on the prices going down. But as you can see, I've made more than that just this month in dividends, let alone for the year. So they're doing well. This just helps me with tracking. You guys don't need to see that. I don't have YMAG anymore in this fund. I do have it in my retirement, but I wanted higher payouts, higher percentages yields, and so I went with YMAX, which is all the individual income funds, rather than YMAG, just the MAG 7, because the MAG 7 are not as volatile as all the rest of these, so they're not going to have as much premium. So YMAX, this most recent one, I got $36.96, and Alti, on the most recent one, I got $38.57. I went ahead and added, so I got some odd numbers here, right? I like nice 100, 200, but I decided if the stock is below my cost basis, when I get the distribution, I'm buying more. I got greedy on Alti. It was below, but it was even lower. I put in a buy for the lower, and it kind of ran up above it, and then I never ended up buying more this past week. But I added to YMAX. I think YMAX, Nefli, and Aptly this week with the distribution money. All right. That's all I got for my trades this week. Seems like you guys kind of like these videos, so I'll keep making them. They're kind of fun, just even a review for me to talk about what I've been doing. Maybe if I say it out loud, I'll catch some stupid moves and stop it. But appreciate you guys watching. I'll have week look ahead videos coming out tomorrow for Alti, LFG, and all the individual income funds, as well as guesstimates for the distributions that will be announced on Wednesday. So I got the dad joke of the day. Before I do, just thank you again. Thanks for thanks for watching. Thanks for clicking, liking, subscribing, and commenting. I do appreciate the comments. I try to get back to everybody. So, all right, dad joke of the day. You probably heard this one before if you're dad. Why do seagulls fly over the sea? Because if they flew over the bay, they'd be bagels. All right, to 98% of my viewers, happy Father's Day tomorrow, and to the it's even more than 98. So to the 1 point something percent females that are watching, I appreciate you listening to me talk for this long. My wife won't. But all right, have a good rest of your weekend. Catch you in tomorrow's video.